preparing for a fund administration and Geneva Platform roles at SS&C GlobeOp interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the daily NAV process for a hedge fund. The interviewer wants to assess your end-to-end fund administration knowledge, including trade capture, position reconciliation, pricing, expense accruals, investor activity, NAV calculation, review controls, and final client reporting. While answering, focus on sequencing, data ingestion, reconciliations, valuation, accruals, fee calculations, NAV review, exception resolution, sign-off, and reporting to managers, investors, or internal oversight teams. Daily NAV starts with complete and accurate data. I would first ensure trades, cash, positions, corporate actions, and investor activity are loaded into Geneva or the accounting system. Then, I reconcile positions and cash to brokers and custodians, price securities using approved sources, book accruals and fees, and calculate P&L. After that, I review exceptions, investigate material breaks, compare NAV movements to market drivers, and release the NAV only after proper approvals. Question 2. What is Geneva, and why is it widely used in fund administration? The interviewer is testing your understanding of Advent Geneva as a portfolio accounting platform, especially its role in trade processing, position keeping, P&L, accounting, reporting, and multi-asset fund operations. Make sure to cover Geneva's strengths in portfolio accounting, transaction processing, general ledger integration, multi-currency support, corporate actions, reporting, and its importance for hedge funds and complex strategies. Geneva is a portfolio accounting and fund administration platform used to maintain books and records for investment funds. Its value is that it handles complex instruments, multi-currency portfolios, corporate actions, tax lots, realized and unrealized P&L, and accounting reports in one environment. In a GlobeOp role, I would use it to validate trade activity, maintain positions, investigate breaks, generate trial balances, and support NAV production. Accuracy in Geneva directly drives NAV quality. Question 3. How would you investigate a cash reconciliation break between Geneva and the prime broker statement? This question evaluates your practical reconciliation approach, attention to detail, ability to isolate timing versus booking issues, and understanding of cash movements in hedge fund operations. In your answer, talk about comparing opening balances, trade settlements, wires, fees, financing charges, dividends, FX, corporate actions, timing differences, and documenting root cause before clearing the break. I would start by confirming the prior day's closing balance ties to the current opening balance. Then I would compare all cash movements, settled trades, dividends, interest, financing charges, management fees, investor flows, wires, and FX conversions. If the broker shows a movement not in Geneva, I determine whether it is a timing item or a missing booking. I would document the cause, book any approved adjustment, and escalate unresolved or material breaks promptly. Question 4. What is the difference between trade date accounting and settlement date accounting? The interviewer wants to assess your accounting fundamentals for investment funds and whether you understand how transaction recognition affects positions, cash, receivables, payables, and NAV timing. Be sure to mention when trades are recognized, how unsettled trades are reflected, why most fund NAVs use trade date accounting, and how settlement affects cash reconciliation. Trade date accounting records a transaction when the fund commits to buy or sell, while settlement date accounting records it when cash and securities actually exchange. Most hedge fund NAVs use trade date accounting because it reflects economic exposure immediately, For example, if a fund buys equity today, settling T plus 2, Geneva should show the position and a payable before cash moves. Cash reconciliation still needs settlement tracking because broker cash will not change until the settlement date. Question 5. How do you explain daily P&L movement to a portfolio manager or client? This question evaluates your ability to connect accounting outputs to investment performance, explain drivers clearly, and identify whether P&L changes are market-driven or caused by booking, pricing, or corporate action issues. While answering, focus on price movement, realized versus unrealized P&L, FX impact, income, financing costs, new trades, corporate actions, and reasonableness checks against market performance. I would break P&L into understandable drivers rather than just quote the final number. First, I separate realized P&L, unrealized market movement, FX translation, income, financing costs, and fees. Then I identify the largest position-level contributors and compare them to market moves. If a technology long rose 5%, the unrealized gain should make sense against exposure. Any unexplained movement would trigger checks on pricing, trade booking, corporate actions, and FX rates before I report. Question 6. What controls would you perform before releasing a NAV? The interviewer is testing your understanding of NAV control frameworks, quality assurance, maker-checker review, materiality thresholds, exception management, and operational risk mitigation in fund administration. Make sure to cover position and cash reconciliations, price validation, stale price checks, expense reasonableness, P&L analysis, trial balance review, investor allocation checks, approvals, and audit trail documentation. Before releasing NAV, I would ensure all key reconciliations are complete and material breaks are explained. I would review prices for stale or unusual moves, validate corporate actions, check expense and fee accruals, and perform P&L reasonableness against market exposure. I would also review trial balance classifications, investor allocations, and share class calculations where applicable. Finally, I would confirm all exceptions are documented and that the NAV has passed maker-checker approval under agreed control procedures. Question 7. How are management fees and performance fees calculated in a hedge fund NAV? The interviewer wants to assess your understanding of fee accrual mechanics, high watermarks, hurdle rates, crystallization, investor-level calculations, and how fee terms flow through fund accounting. In your answer, talk about management fee basis, accrual frequency, performance allocation or incentive fee, high watermark, hurdle, crystallization timing, and the importance of fund documents. Management fees are usually calculated as a percentage of net assets or committed capital, accrued daily or monthly, depending on the fund terms. Performance fees, or incentive allocations, are based on profits above conditions such as a high watermark or hurdle rate. I would always refer to the offering documents because terms vary by fund and investor class. In NAV production, the key is accurate accrual, investor-level allocation, and ensuring fees are only crystallized when contractually earned. Question 8. A security price looks stale in Geneva. What would you do? This question evaluates your valuation control mindset, ability to challenge pricing data, understanding of approved pricing hierarchy, and judgment when handling stale, missing, or illiquid security prices. Be sure to mention checking pricing sources, market movement, last trade date, broker quotes, valuation policy, price overrides, documentation, materiality, and escalation to valuation or client teams. I would first confirm whether the price is genuinely stale by checking the prior price date, market activity, security type, and approved pricing source. If similar instruments moved materially while this one did not, I would investigate further. Depending on the valuation policy, I might request an updated vendor price, broker quote, or client-approved valuation. I would never override casually. Any manual price change needs support, approval, and documentation because pricing directly impacts NAV. Question 9. Explain how corporate actions impact fund accounting and NAV. The interviewer is testing your understanding of how dividends, stock splits, mergers, spin-offs, rights issues, and coupons affect positions, cash, income recognition, cost basis, and P&L. While answering, focus on identifying corporate action events, validating effective dates and entitlements, booking position or cash changes, reconciling to custodians, and reviewing NAV impact. Corporate actions can change positions, cash, income, and P&L, so they must be captured accurately. A cash dividend creates income receivable and later cash. A stock split changes quantity and price without changing economic value. A merger may replace one security with another. I would validate the event terms, record date, pay date, and fund entitlement, then reconcile the booking to custodian records. Poor corporate action processing can create position breaks and distorted performance. Question 10. What are common Geneva trade booking issues, and how would you resolve them? This question evaluates your hands-on awareness of trade lifecycle issues in Geneva, including incorrect transaction types, settlement dates, security setup, commissions, FX, tax lots, and accounting impact. Make sure to cover reviewing source files, trade economics, broker confirmations, security master data, transaction coding, settlement and currency fields, downstream P&L impact, and controlled correction procedures. Common issues include wrong transaction type, incorrect settlement date, missing commission, wrong currency, duplicate trade, bad security setup, or incorrect long versus short treatment. I would compare Geneva against the trade file, broker confirmation, and OMS data to identify the mismatch. Then I would assess the accounting impact on positions, cash, cost, and P&L. Any correction should follow a controlled process, with support retained and notification to reviewers if the NAV impact is material. Question 11. How do you handle a position break that remains unresolved near the NAV deadline? The interviewer wants to assess your prioritization, escalation judgment, materiality assessment, communication discipline, and ability to protect NAV quality under time-sensitive production deadlines. In your answer, talk about quantifying materiality, identifying likely cause, checking timing differences, escalating early, documenting assumptions, obtaining approval, and avoiding unsupported adjustments just to clear breaks. I would not ignore the break or force an unsupported adjustment. First, I would quantify the position and NAV impact, then quickly check common causes such as pending trades, corporate actions, transfers, or broker timing differences. If unresolved and potentially material, I would escalate to the team lead, client service, or broker contact before the deadline. The decision to release NAV should be based on documented analysis, materiality thresholds, and proper approval. Question 12. What is the difference between realized and unrealized P&L? The interviewer is testing your core investment accounting knowledge and whether you understand how closed transactions, open positions, cost basis, market value, and NAV performance are presented. Be sure to mention sold versus open positions, cost basis, sale proceeds, mark-to-market valuation, tax lot implications, and why both categories matter for performance reporting. Realized P&L comes from positions that have been sold or closed. It compares proceeds to cost basis. Unrealized P&L comes from positions still held and reflects the difference between current market value and cost. For example, if a fund buys shares for 100 and they are marked at 115, the 15 gain is unrealized. If the fund sells at 115, it becomes realized. Both feed total NAV performance, but but they explain different parts of the portfolio lifecycle. Question 13. How would you support a client query questioning yesterday's NAV movement? This question evaluates your client service approach, analytical discipline, communication clarity, and ability to trace NAV movements through positions, prices, trades, expenses, FX, and investor activity. While answering, focus on acknowledging the query, analyzing NAV bridge components, identifying major drivers, validating source data, explaining exceptions clearly, and responding within SLA with evidence. I would first acknowledge the query and confirm the exact NAV date, share class, and movement being questioned. Then I would build a NAV bridge covering investment P&L, FX, income, expenses, subscriptions, redemptions, and fees. I would drill into the largest drivers and verify prices, trades, and accruals supporting them. The response should be clear, evidence-based, and timely. If we identify an error, I would escalate under the fund's NAV error policy. Question 14. What makes fund administration at SS&C GlobeOp different from a middle office trade support role? The interviewer wants to assess whether you understand GlobeOp's fund administration service model and can distinguish NAV ownership, accounting controls, investor reporting, and client deliverables from trade support activities. Make sure to cover fund accounting responsibility, NAV production, reconciliations, financial reporting support, investor allocations, control environment, client interaction, and how middle office focuses more on trade lifecycle support. Middle office is usually closer to trade capture, confirmations, allocations, and exception management around the investment process. Fund administration is broader from an accounting and reporting perspective. At SS&C GlobeOp, the fund admin team is expected to maintain accounting records, reconcile cash and positions, calculate NAV, process fees and investor activity, support audits, and respond to client questions. The roles overlap operationally, but fund administration ultimately focuses on accurate books, controls, and deliverables. Question 15. If you joined a Geneva fund accounting team, how would you get productive in your first month? This question evaluates your onboarding mindset, process discipline, willingness to learn systems, understanding of fund documentation, and ability to become useful in a production-driven SS&C GlobeOp environment. In your answer, talk about learning fund structures, reviewing procedure notes, shadowing NAV cycles, mastering Geneva workflows, understanding reconciliations, asking targeted questions, and contributing to low-risk tasks first. In my first month, I would focus on learning the funds, not just the system. I would read fund documents, procedure notes, fee terms, valuation policies, and prior NAV packs. Then I would shadow the daily cycle in Geneva: trade loads, reconciliations, pricing, accruals, P&L review, and reporting. I would start with controlled tasks like break investigation or report checks. Ask specific questions and build a checklist so I become reliable before taking ownership. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.